Good morning, everybody. Thank you for tuning in. I'm Rich Szerman on KHTS, FM 98.1, AM 1220, your hometown station. And you've got the Real Estate Fix. Thank you guys again. We're going to talk today about all things real estate. We have a special guest today, Marcy Cross Country Mortgage. We're going to be talking about all things mortgage, which is great. Really much looking forward to that. So we'll have all kinds of good information for you guys as far as mortgages, interest rates, refinancing, buying, selling, all that good stuff. So a lot of good information out there today. We're going to start today, as I always do, with a bit of a market wrap. I'm going to cut it kind of short today as far as the market stuff because we do this every show, and it hasn't changed a whole lot from the last show, but I want to give you guys a bit of an update. There was just a meeting, actually, and this is kind of important, it would have been Wednesday, of the Federal Reserve, and they came out and they said that, well, let's read what Jerome Powell said to begin with. Inflation has started to move up now, we think partly in response to tariffs, and there may be delay in further progress over the course of this year. Overall, it's a solid picture, which is good to hear from the head of the Fed. The survey data, both household and business, show significant, large, rising uncertainty and significant concerns about downside risks. What they're worried about is stagflation. That's what they're talking about. We talked last time about what's going on with the GDP in the U.S. We had about 4% GDP last year, a little bit under that. The problem is that's a very solid number. Anytime we're over 3%, we're in pretty good shape as far as growing the economy. The problem is that the last quarter was only 1%. And that is a massive, massive downturn. So we did really well in the first three quarters, and in the last quarter of the year, things have kind of gone, pear-shaped. So we're definitely slowing down. The economy's slowing down, and inflation is picking up. And the problem is, and this is the massive problem, I want to talk to you guys about this a little, is that you don't curb inflation with some of the policies that we currently are pursuing, rightly or wrongly, whether you like the current occupant of the White House or not, is not really how I look at it. I just call the balls and the strikes as best I can. And what I can tell you for certain is this is not the way you do that. The three basic principles that seem to be the Trump plan for housing, because I think we can all agree the interest rate is too high and housing prices are too high. Usually when the interest rate is this high, housing prices go down. When interest rates get much lower, housing prices go up. That's kind of the natural progression of the market. But we're not seeing that right now. And there are a lot of things that led to that, the pandemic mostly. There's been a lot of bad economic decisions in this country over the last couple of years, which has kind of put us in this position, which we can talk about. But at the moment, going forward, our largest problem is the three-part plan that Trump is putting forward is just not going to work. It's just not. I mean, 1 + 1 will always equal 2. You can tell me to the top of your lungs that it equals 4, but it doesn't. It equals 2. So the three basic ideas of this, and this is what I want to talk about a little bit. The three basic things are we're going to build houses on federal land because we need a lot more houses in this country where we definitely do not have enough inventory. That's part of the deal. But I don't see how building on federal land, which even if you opened up the federal lands today, you're still not turning over a shovel of dirt for a couple of years, and you're certainly not, no one's moving into a house for a couple of years after that. So I don't see how that's going to help, because unless builders are going to be willing to sell the houses at a dramatic discount because they get the land for free or something, I don't see that working. And again, I hope I'm wrong about all of this, by the way. I would very much like this country to be successful. I'd like the current occupant of the White House to be successful. I just got to call it the way I see it because, people depend on me to know which way the wind is blowing, and I'm telling you which way the wind is blowing. So, yeah, building on federal lands is not going to do a darn thing to curb housing prices or to bring down the interest rate or to make housing more affordable, and it will help in absolutely no way whatsoever. And even if it does, it won't be for years. So building on federal lands is a giant waste of time, besides which federal lands are usually federal lands for a reason. But there is plenty of it. I don't necessarily want to live in the desert that used to be a bombing run in Nevada, but, hey, federal lands, what can I tell you? Because I doubt they're opening up Yosemite. But anyway, so that's his first thing. His second thing is deporting illegal immigrants. And, okay, however you feel about that, one way or the other, that is definitely not going to help housing. This ridiculous idea that if you deport, several million people, that because they're not living here, suddenly that will open up housing for other people is insane. I mean, it just is, because the type of housing that illegal immigrants are in, by and large, is not the type of housing that most people are going to volunteer for. You also see more people living in a house together, that sort of thing. So I don't see that's going to make a dent. And what the problem it is going to cause is absolutely going to cause inflationary problems with the housing market, because building houses is expensive. I've got a friend of mine who builds houses in Arizona. I was talking to him this last week, and I asked him this very question. I said, how much of your business, your operational capacity, shall we say, has been damaged by the current immigration policy? And I think he fell out of his chair because, yeah, that's a big number. He said he's lost about 30% of his framing crews, and he's lost about 25%. So he takes him that much longer to get a house framed and costs him that much more money because now he's got to pay guys more money to do it, and it takes him that much longer to get houses painted. So it's taking longer to get those houses built, and it's taking longer to get them sold, and there you go. And he's probably going to sell them for more money, I think, because it's costing him more to get them built. So yeah, curbing immigration, I'm all for, but just deporting people en masse is not going to help the housing market. I don't think it's going to help the economy at all, and I think the Fed kind of backs me on this. The data is in, as they say, so far. So that is absolutely not going to work. And Trump's third idea, which is also completely insane, is that somehow he's going to drop the interest rate by simply telling the Fed to do so. It doesn't work that way. Now, this big plan that he's got to crater the bond market as a way to bring down the interest rate will work, but when you crater the bond market, back up a minute, the rate on the rates that come out of the bond market, especially the 30-year or the 10-year T-bill, have a direct impact on the mortgage rate. It sets the rates, and banks usually take 2 points in profit, and then they set the rate themselves. So there's definitely a relationship between what the Fed does, the interest rate, and the market. We can talk about a little bit that with Marcy when she comes in, but it is not a direct one-to-one correlation. So since the idea is to crater the bond market, drive that down, and because by driving that down, you'll drive the interest rate down on everything else, especially in my interest in housing, I just don't think it's going to work, because the problems you're going to cause by damaging the bond market, intentionally damaging the bond market, or lowering the yields in the bond market, to be more specific, is not going to generate the kind of economic relief that is being proposed. I mean, what you get out of this administration is a lot of wishful thinking. I suppose you get that out of every administration. But the big difference here is you get this sort of magical thinking, if I click my heels together 3 times and wish hard enough, it'll happen, as policy. And that's just not going to work. I mean, it's just insane. I just frankly don't get it. I really, really don't. But let's talk about some of the numbers. So before I do, I'll tell you guys a little joke. You guys will like this. I heard this joke from a friend of mine this week. He said, let me see if I can remember this. How many Trump supporters does it take to screw in a light bulb? And the answer, of course, is none. Because Trump will simply say that the light bulb has been screwed in, and the supporters will hit him in the dark. Because that's what these guys do. They don't screw in the light bulb. They just tell you it's fixed, as if the light's not being on is something you couldn't figure out on your own. And again, I'm rooting for their success because I live here, as we all do, but I have grave concerns. I have very, very grave concerns, and I'm going to tell you why. Let's go over some of the numbers here. According to the good people at Zillow, realestate.com, homes.com, and Redfin, all of them are now predicting lower appreciation or even negative appreciation, meaning prices are going to go down by the end of this year. Now, Realtor.com is probably the worst offender. Their job is to blow sunshine up your skirt. That's kind of what they do. No matter what the market tell you, it's going to be better. And even those guys are now saying that we're going to see price reductions, that we're going to not see the kind of appreciation we've had over the last several years. It's got to tell you something. When the greatest cheerleader is telling you, yeah, we're going to lose, your team's going to lose. And that's kind of where we're at. So let's talk about some inventory numbers, because I think that's where the rubber meets the road. Inventory nationally is up 25%. We have 25% more houses on the market now than we had this time last year. Now, that's a good thing if you're a buyer, but it's a bad thing if you're a seller. The supply and demand. The interest rate is still way too high. It's between 6.5% to 7%, depending on the day and the type of loan you're getting. And that is way, way, way too high. It's about $8 per thousand. In other words, for every $1,000 you borrow right now, it's going to run you roughly $8 a month, including taxes and insurance, roughly. Of course, it depends on the specific interest rate, but that's just way, way, way too high. We were just talking about this morning with a friend of mine here at the station. The house next door listed to her, and it's listed for a little over $1 million. I was doing some math. If somebody buys that house and they have, say, $1 million mortgage, their payment is going to be a little over $8,000 a month, $8,700 a month by the time they're done. And that's HOA and stuff like that. And that's crazy. That's way, way, way too high. My house is worth that. But I'm not selling because I'm not going into a payment like that. That's crazy. So inventory nationally is up 25%. Inventory in California is up 37.9% as of this morning. 37% more houses on the market right now in California than there was this time last year. That is a huge jump. Usually inventory numbers jump by a point a month, and it's a big deal. So 37.9% year-over-year increase in inventory, that's a lot. Active listings are at their highest level in the last 2 years. Houses are taking much, much longer to sell than a year ago, almost double the amount of time to sell than a year ago, because there's more stuff on the market and the interest rates still remain high. I'll give you some more fun numbers. February 2025, the median sales price in California is $829,000. That is already down 1.25% from this time last year. So this is not on the horizon. This is already here. The prices are softening. This is the upshot of the market wrap today. Prices are softening. The interest rate went down a little bit last week, which is good. It started to go back up again. And unless or until the interest rate gets under 6.5, hopefully under 6, I'm voting for 5.5 if I get to pick, we're not going to reach any kind of stability. We're not going to reach any kind of normalcy. So until that happens, the market is going to be a bit like the Wild Wild West. Just accept that going in. But even in the Wild Wild West, you got to know how to make money if you plan to survive. So here's some fun numbers. 38.8% of all of the listed inventory in the United States, roughly 600,000 homes, have reduced their asking price in the last 30 days. I said that last time too. 38.8%. Over a third of the houses listed in the United States, that's every single property that's single family home conducted in the United States, has dropped their price in the last 30 days. That's a lot. In California, 31.8% of all listed inventory in California, about 84,000 homes for those of you keeping score, have reduced their asking price by an average of 4.5% in the last 30 days. That's 31.8% of the California real estate market has reduced their asking price in the last 30 days. And the average reduction is 4.5%. That ought to tell you something. And I'll tell you a story from a client I have now. A couple of clients that are in this position. I have a client right now in Encino, and their situation is, I told them they need to drop the price on the property by about 5%. I told them this about 3 months ago. And they refused to do it because they, like a lot of sellers, think that the list price of the house is the money they're getting. You know, you can't spend money you don't have. You know, if it hasn't sold, you haven't earned that money. You haven't made that profit. You haven't done it. So it's all nice to think that you're going to get that. It's all nice to when the numbers point you in the direction that makes sense to do that. But unless that actually happens, you've accomplished exactly nothing, except putting your house on the market and going through a lot of aggravation, discomfort with people coming into your house and having pictures taken, all the rest of the craziness that surrounds selling a house, to achieve nothing. I told them they need to drop the price by 5%. They refused. They figured, and I quote, we're going to pray on it. I'm all for praying on it. I think that's fantastic. But, God is not a realtor, or makes a very poor one anyway. The numbers are what govern real estate. You do yourself a disservice if you do not pay attention to the numbers. I'm all for prayer. I'm all for spirituality. I'm all for hoping against hope that it's going to happen. It's great that you had a feeling, whatever it is. But the reality is the numbers tell the story. And what the numbers are telling us is prices are coming down. That's just the reality. The market is softening. So if you're a buyer, it's very, very good news. If you're a first-time buyer, it's great news. Because if you're a buyer who has to sell something first, it's not as great. So prices are starting to come down, and I think that's a trend that's going to keep going. I think we're going to continue to see that, largely because of the policies out of the White House, largely because of the policies out of the Fed. Inflation is going to get worse. You do not curb inflation by raising tariffs. It takes lumber to build houses. Creating tariffs is not going to bring the lumber business back to the United States. Most of our lumber to build houses comes from Canada. And that's the reason for that is we allowed them to buy all of our lumber mills and move them across the border because it economically made sense to do that at the time. And now we no longer really have that capacity here in the United States. We can argue all day long as to whether we should or shouldn't have that capacity. I think we should. Involved in reopening mills and steel mills and things like that and bringing those jobs back to the U.S., I think it'd be great to rebuild that infrastructure. But that is a 10 or 20-year process. It is not going to happen in the next year, 2 years, or 3 years, or 4 years. Also, you need to do that with government support, not with tariffs. Tariffs cause prices to go up. With all due respect to my friend that back Trump like crazy, no matter how you cut it, if you make the price of goods more expensive to the people selling those goods, they will absolutely pass along that increase to the consumer. Prices are going up on everything else. Prices are coming down on housing. I think the bubble, I don't even think it's a bubble exactly, and I don't think it's going to be the same kind of tragedy we had in 2008, 9, and 10. It's not going to be that bad, but it's going to be problematic, and it's going to last a long time. So we're kind of reaching this trend now where the prices are turning around. The way I would describe it is up until really about 6-8 months ago, it was 90-10 seller's market. Sellers could kind of dictate within reason. That has changed dramatically. I would say now it's about 60-40, still a seller's market, but a 60-40 split. And probably by this time in the next couple of months, it's going to be less than that. We're transitioning from a seller's market where the sellers had all the power to a buyer's market where the buyers are going to have more power because there are going to be fewer of them out there. There aren't enough of them out there right now, and we're going to have fewer on top of that. I mean, keep in mind, we've been in a real estate recession here for the last 3 years. Now, when I say a real estate recession, I don't mean the price of the properties. I mean the amount of properties sold. We have been in Santa Clarita, we had 40% fewer sales year over year in the last year. And that number was true the year before as well. Not too many industries can survive when you lose 40% of your clientele, when you use 40% of your business just doesn't exist. Most industries can't survive. And that's where you're seeing realtor after realtor get out of the business. You're seeing all sorts of ancillary services, lenders and mortgage companies, things consolidate. Seeing real estate companies consolidate. I mean, everybody's kind of battening the hatches because it's rough seas. It really is. There's definitely, the storm isn't on the horizon. It's here. And I think prices need to go down. So maybe the Trump idea, maybe the theory is to create a recession and make it so bad that it forces prices down, forces housing prices down and everything else. Maybe that's the plan, and I just don't get it. I hope that's the case. I hope there's a plan out there that I don't get, because frankly, I'm just not seeing it. So that's kind of where we're at as far as the market is concerned. I'm sorry I don't have a lot of much better news, but unfortunately, the CPI is going down. We are not making the kind of money or producing the kind of product that we should be in this country. We had a good year last year. We're going to have a bad year this year, and it's already getting there. That is going to cause the Fed to, if not raise rates, at least not lower them. And I think market forces are going to keep the rate high as well. So hopefully we get under 6.5 and stay there. Hopefully we get to 5.5 by the end of this year, but I just don't see that happening. The Fed was projecting, just so you know, was projecting 3 to 4, possibly as many as 5 interest rate cuts over the 2025 fiscal year, and now they're talking 2 or none. So they're already reacting to this. Yeah, instability does not create healthy markets. Whatever you can say or don't say about the current occupant of the White House, he's unstable. His policies are unstable. Nobody knows what's going to happen tomorrow. So very, very hard for economists and for bankers and people like that to work in that kind of scenario with any kind of certainty. Markets like certainty. They don't like instability, and we got instability in spades at the moment, and that is very, very unfortunate. Like I said, I'm not making a political comment as to whether I like them, hate them, whatever. It doesn't work that way for me. For me, it's what does me and the people I work for the most good. What does me and my neighbors the most good? That's all I really look at, and that's not what we got right now. How that balances out, I don't know. Like I said, I hope I'm wrong. I hope he has better economists and better information. He's not just from what I'm seeing is hope I'm drawing an incorrect conclusion from what I've been seeing. But so far, again, prices are down, inventories are up, and the interest rate is still way too high. And prices are going to keep coming down. The market is softening, and that's going to continue. So that is where we say is that. On that cheery note, I think we'll move on to something a bit more fun. Why don't we move on to talking to Marcy James? We'll go to break. We'll hear from our advertisers. I always like to hear from them. And guys, do me a favor. When you hear the advertisers and stuff, when you use them, you do support the show and you avail yourself of their services. So I'd appreciate it if you guys do that. It's super helpful. What we'll do is we'll go to break. We'll listen to the advertisers. That'll be fun. When we come back, we'll have Marcy James in from Cross Country Mortgage. We'll talk about all things mortgage, and hopefully I'll get out of this morass of this depressive morass of what I think the economy is going to do and what the market looks like. We'll have Marcy on. We'll brighten up the show a little bit. So listen through the break, and we'll be back shortly. I'm Rich Szerman. You're listening to KHTS, FM 98.1, AM 1220, The Real Estate Fix. Thanks, guys. Hey, everybody, welcome back. You're listening to The Real Estate Fix. I'm your host, Rich Szerman, on KHTS, AM 1220, FM 98.1, your hometown station. Thank you guys for tuning in. I hope you guys were listening to the first part of the show. I'm sorry it was a little depressing. I just don't have a lot of good news on the market at the moment, unless you're a first-time buyer, in which case I have a lot of good news for you. But let's get back on track here. We have in studio today special guest Marcy James. She's the branch manager with Cross Country Mortgage. So we're going to talk about all things mortgage and all things buyers and refis and all sorts of good stuff. We got all kinds of questions to get into. I reached out to kind of the community I'm sort of a part of and asked them for some questions, and I got, as you guys know if you listen to the show regularly, I get like 5 or 10 questions a week, and if I'm really lucky, we get through like 4. But in this case, I think we have 17 or 18 questions. So I doubt we're going to get through all of these. So those of you who didn't get your questions answered, who wrote in, I appreciate it. I thank you very much. Continue to write in. It's very nice you guys to answer when I ask these questions. But I'm not going to get to all of these. However, I will, as always, get all of your questions answered. Even if we don't get it done on the air, we will get them answered for you, I promise. So let's get into this. So our special guest, Marcy James, as I said, she's the branch manager with Cross Country Mortgage. God, you've been around for, I don't want to say forever, but a long time. One of the few people who's been in real estate in this town longer than I have, which is pretty rare. I won't say how long because I don't want anybody to do the math. We can do the math on me. I started at 19 and I've been doing this for 33 years, so you can figure that out on mine. 34 years now. Also, as long as we're talking about dates and things, today, get a little off topic here for a second. Today is my anniversary. I promised my wife I would say something. Actually, I promised my wife I wouldn't say anything on the air, so I guess I'm doing it anyway. Yeah, 33 years actually.
Well, happy anniversary.
Thank you very much. Thank you very, very much. Yeah, the surprise is not that I'm still with her. The surprise is that she is still with me. But, so thank you, honey. I appreciate that. Your tolerance is appreciated. Anyway, those of you who don't get that, she's at home right now laughing, and that's why I did it. But anyway, so let's go back on track. So let's get into some mortgage stuff. I know you've been doing this forever. I know we talked. I didn't know this until this morning. You have 5 kids. You have 5 girls.
I do.
You raised 5 girls. Yeah. So her ability to multitask is superb. I had one and it completely just destroyed me. So it was great. I loved every second of it. I would do it again in a heartbeat. But yeah, one almost killed me. I don't get how you get
Most
through
women
5.
multitask fairly well.
True.
It's just the way our brains are wired.
True. I think it's a
I don't
biological
think men
imperative.
are wired quite that way. They have other gifts and talents,
Yeah,
but
fair
maybe
enough.
not multitasking.
Yeah, no, I would agree with that. Fair enough. But I've spent 33 blissfully thrilled years with somebody who I freely admit is smarter than I am. That's the difference. I knew that going in. And again, when I say this all the time, I'm not putting myself down. I'm not saying I'm not bright. I hold my own. I'm pretty bright. She's just smarter than I am. That's all. But I'll put it to you this way: we both went to the same school. I got a degree in history with a double minor in music and philosophy. She got her MBA, then went on to get she got her business degree, got her MBA, and got her law license, and then practices law. So one of us was a little smarter than the other, just going by the numbers. I won't even get into our driving issues. Anyway, I've had a number of speeding tickets and she's had none. She likes this story a lot. We were once in traffic court and I was determined to make my case, even though the case had already been dismissed. She was sitting next to me, literally kicking me under the table, trying to get me to shut up. And this is how dumb I am. Definitely the difference between men and women here. I said, "Why are you kicking me? I have something I need to tell the judge." And the judge said from the bench, and I quote, "Mr. Sherman, listen to your wife." And then my wife, because she is hysterically funny and very intelligent, said, "Your Honor, is that an order of the court?" And she slammed down the gavel and said, "Yeah, we'll make it an order of the court." So every so often she likes to remind me that I'm court ordered to listen to her.
Listen. I like that.
And she's right. Yeah. Well,
did you get off on the ticket though?
I did, because it was my daughter was diagnosed with diabetes, and on the day she was diagnosed, they actually said we could get her to the hospital quicker if we drove. So I did. And there is an officer in town here who everyone knows. You don't usually work the motorcycle that long. I hope it rains. Anyway, not a fan. Who thought it would be fun to pull me over, and when I told him that my daughter was in the back seat because I was taking her to the hospital, he decided I was lying. Yeah, so he kept me there for 45 minutes to teach me a lesson, I guess. Here's the part I love, though. When I went to go complain about this is a number of years ago, at the sheriff's station, I know a lot of people who work there, who grew up in this town, and I said, this is what went on. I'd like to lodge a complaint, because I asked how to do that, and I was told how to do that. And the sergeant at the desk pulled out a giant file folder. She said, "Well, who is it?" And I gave the name of the officer, and she went, "Oh," and pulled out a giant file folder, which immediately made me ask, if you have a giant file folder devoted to this one pinhead, why is he still there? Can you not fire him for incompetence? Because this is pretty damned incompetent. Nah, not the way that works, I guess. But anyway, but having said all that, I have a lot of friends who are sheriffs in this town. I adore them. They do a fabulous job.
Right.
And they don't get very well paid, and it's a really tough
They have a
job
hard
to do. There are not enough of them. They do not get enough support, and they're fantastic. This is just one guy who's an outlier, but he's such an outlier that everybody knows about him. Everybody. I'm not using his name, so I don't want to get in trouble. I don't want to get him in trouble, but everyone in you in town who've been here for any length of time, you know who I'm talking about. Anyway, that's why. That's why I was in court that day, and that is why I wanted to plead my case, because he said I went around a corner at that if I'd done that, it would have flipped the car. I know that because I talked to some engineers at Chrysler. They wrote me a letter that said that. I was very prepared for this, so I was kind of annoyed that I didn't get to plead my case. But anyway, I'm court ordered to listen to my wife. So happy anniversary, honey. There's that. Now everyone knows. Okay, let's get back to mortgage stuff. I had a bunch of questions for you. And if I don't get through some of these, I'm going to hear from listeners. So let's start here. This is my favorite. This is kind of more of a me question. Does it matter where or from whom I get my mortgage?
It doesn't matter where you get your mortgage. It matters who you work with and get an offer accepted. It matters in the timely delivery of being able to close on time, to be able to foresee problems that are up front and mitigate them before they become a problem that delays any of the transaction. So that part, it does matter. There's a lot of great mortgage lenders out there. There's a lot of great ones. You really want to stay with somebody who's local, somebody who has relationships in this community, because that's one thing buying in this community, much like any of the other communities. If you have somebody that a pre-approval letter has come across your desk and it's somebody that you worked with this lender before on other transactions, you're much more apt to say, wait a minute, I know this lender, I know that we're going to close, versus somebody who sends a letter in of pre-approval and you don't know them and you can't reach them to ask questions and they don't answer their phone. You don't know, did they do a full pre-approval?
Yeah.
Have they been pre-underwritten?
Yeah.
You don't know.
Yeah, it's I say around the office all the time. Certainty has a value.
Certainty has a value.
And when you're working with a lender who is a known commodity, who has experience, and who has a really, really exceptional track record as you do, it carries weight. You know, if there's multiple offers on a property, we're getting away from those unless the house is really well priced these days. But even in a competitive situation, we just had this last week with a property. Multiple offers on the property. Well, I didn't. The buyer is not mine on this one, and the house went to somebody. We had two that were exactly the same at the end of it, literally exactly the same to the dollar at the end of the day. They were like 14, I think, started.
Okay.
And the one who had same mortgages, everything else, they were both FHA buyers. One of them I knew the lender, I have a relationship with a little bit, and we've worked together before, and he's come through for us before on other deals for other agents. So it was not a hard call when the client said, "Well, this is so close. Which one do I pick?" Well, the one who I know is going to deliver is better than the one who
Right.
I don't know. The known quantity.
Correct. When you're meeting with your sellers, you want to be able to have all the information.
Oh, sure.
And an unknown, one piece of unknown could be that question mark, like, will this be good or won't it be good?
Yeah, it'll derail a deal for sure. So yes, it's incredibly important is the answer to that question. Obviously, I recommend Marcy. I wouldn't have asked her to come on the show with us, and that's why I want you guys to kind of hear from her, because I'm very fortunate that I've been around for a very long time, and a lot of people kind of come to me and want me to send them business and stuff. A lot of affiliates and stuff. I'm very fortunate to kind of be on everybody's dance card, which I don't know why. I'm just very glad to be there. But yeah, we choose Marcy because she's spectacular. Because we know that when she says a deal can be done, it can be done. We also know that she will keep after. Like we've got one. I don't want to talk about the client specifically, but we've got one right now where they're not ready yet. They
Right.
will be. They will be ready at some time in the not too distant future, but they're not ready yet. And I think you've been working for about 4 or 5 months. You've been
Right.
working with them to get them ready. So there's that roll up to go, so they'll be able to pull the trigger when the time comes as well. That not every lender is up for.
Well, that's part of the relationship and building with your clients. You're there to be their advisor. And their advisor doesn't mean I give you advice right now. Go ahead, go buy a house. Sometimes it means you have to be in position, and these are the steps you need to take. And you want to coach them along that way because you're their partner in getting them to the finish line. You don't want to just dump them because they're not ready today.
Yeah.
You have to be able to build those long-term relationships.
Well, yeah. I mean, unfortunately, a lot of lenders don't really have the intestinal fortitude to work with somebody who's not going to be ready for the next year. Everyone says they
unfortunate.
do, but the reality is most don't.
Yeah.
And I don't blame them. It's just part of the business. That's just kind of is what it is. But it is far, far better to work with somebody who has the stamina for it. Okay, let's move on to the next one. I get this question all the time. It's a pretty obvious answer though. Do I need to get pre-qualified or pre-approved for a mortgage, and what is the difference?
Absolutely. It's an integral part of the transaction. A pre-qual is somebody who called a lender and said, I work for DWP, I make X amount of dollars a year, and they say, okay, what's your name and your address? They might do a soft inquiry and say, okay, send me a pay stub. All right, yeah, I think you can buy a house. Thinking you can buy a house and knowing you buy a house are two different things.
Very.
A pre-approval is you have all the finances. You have assets, you have liabilities, you have a full credit report, you have tax returns, you've put them through desktop underwriting, and in many cases, we've already put them through a pre-underwrite. We know when we send a pre-approval letter, the transaction is going to close, unless an unforeseen happens, like they lose their job during the transaction. That's not the lender's fault or the realtor's fault. That's just a situation that derailed the transaction.
Well, I'm sure you've seen this. My favorite of all time is why did you go buy a car 5 days before we were going to close escrow?
That happened to me yesterday.
Yeah. Oh, see, there you go. And the answer is, well, it didn't cost me any money. No, I'm not.
Yeah.
When we said don't buy anything, we meant don't buy anything. The day after escrow closes, go ahead.
Yeah.
But
Yeah.
so we have to
It does
unravel
happen.
those.
No matter how many times we say it and we try to counsel them, some people just think outside the box and think it does not pertain. But
Yeah.
it does. Or like in this case, he thought I wouldn't find out.
It's not about you finding out. You're not
get
going
a
to bed without
credit
dinner.
alert.
You're not missing dessert. It's because you're trying to get a loan.
You're buying a house. We get a credit alert. Something's changed on your credit profile.
Yeah. Oh my God. The bank has to be able to.
Yeah,
has
and
to-
that
has to send
BMW,
the
I hope
funds.
it lives well.
Yeah, I hope it's a big one. I hope you got one
Yeah.
of the SUVs. You can fit a bed in the back. Yeah, so that's the difference. The pre-qual is you could probably buy a
glance
house.
at information.
Yeah, a pre-approval is you are good to go. And I will tell you, when you're making an offer, because we represent buyers a lot too, when you're making an offer, having a pre-approval is absolutely key. It puts you in a much stronger position. It kind of puts you, it's sort of like if you're bidding on anything. If somebody is bidding with credit, you're bidding with cash, which is essentially where you're at if you have a pre-approval, you're in a much stronger position. Someone will sell you the house for less money than because you are pre-approved versus going with somebody else who hasn't talked to a lender yet or is just pre-qualified.
It puts the power back on the buyer's side because when a
Absolutely.
buyer's out there looking at homes and they walk in like, oh, I love this home. It fits everything we need. Can we afford it? What will our payment be? How much money do we need? That takes away all the joy because you haven't figured out that point. If you know going in, this is your top price point. This is how much money you'll need, and this is what your payment's going to be. I even have my clients during pre-approval to get an insurance quote
Yeah, well, now
in the demographic neighborhood
that
because
was
we
actually
have
a
an
question we're going
insurance
to come into
issue.
later, so I'm glad you touched on that.
So it gives
insurance
the
policy.
buyers, they walk into a house and they say, okay, we know we can afford it, we know our numbers, but do we like them?
Yeah.
It puts puts the home shopping back in perspective.
Mm-hmm.
It takes that question mark out.
Yeah, it lets them focus on the thing that's the most important, which is what it's going to be like to live here, because they already know the
Absolutely.
numbers. We had one a couple of months ago. I wanted to kill the agent because he's just such a knucklehead. He didn't bother to tell his client, and this is in Friendly Valley, didn't bother to tell his client, who was the buyer for this property, what her payments would be. When she found out, she decided not to buy the property. We had 70-day contingency periods. So we were 16 days in. We were looking for contingency waivers, and that's when she demanded to find out what her mortgage payment was going to be, which is reasonable. And when she found out, she said, "I'm not buying that house." And we'd
That's
done repairs and all
unfortunate.
kinds of stuff, derailed the whole thing. We had
That's
multiple.
unfortunate.
The really hard part is we had 2 buyers for that property, so we lost a buyer. We got another one about a month or 2 later.
Yeah, of course,
But we
but
lost
still.
a buyer goofing around, and so it cost my client a couple of more extra mortgage payments and things like that because the realtor just did a bad job.
It sounded like the lender didn't go over numbers. They have to go over numbers.
Yeah, I'm with all due respect, I think the realtor is also responsible for that as well. It's blaming an affiliate when you're the realtor is really a bad policy because it's your job to make sure, it's sort of like running a 3-ring circus and you're wearing the big hat. It's your job to make sure that the juggler's doing their thing over here and then the fire eaters or the lion tamers doing that. It's your job to make sure that everything's running smoothly. And when you have good affiliates like yourself, it makes it very easy.
Right.
I don't have to worry about when a client goes to you. You'll just tell me and we're good. There's no oversight really I do except, hey, pay Marcy is where we're at. That's really all it makes it a lot easier, a lot better. Again, certainty makes it easier and better for everybody. But the agent didn't do his job. The lender may not have done their job as well, but the buck's
Right.
got to stop somewhere. And in this case, it's the agent. And the
I do
agent
see it.
is
That's the
bloated.
uncomfortable conversation. How much money will you need and what will your payment be? People are so afraid of having that conversation with the buyers. And yet it's the cornerstone part of a transaction.
Yeah. Well, oftentimes, I'm sure you found this as well, buyers are afraid to ask. So you need to tell them. It should not be, their payment should not be a surprise, ever.
No,
ever.
Ever. Nor should the closing costs.
Yeah, exactly. Same thing. That's actually another one down here. Okay, this is one I wanted to ask. How do interest rates affect buyer behavior? This is one of my absolute favorites of all time. How do interest rates affect buyer behavior?
It depends on the conversation, to be very honest with you.
Sure.
Because a lot of people right now, there's the 2% and the 3% rates sitting out there. People don't want to move from those homes. They want to stay in those homes because those rates are gone.
The lock-in
We don't
effect.
foresee those coming back.
They're not
That was an anomaly.
Yeah.
But a lot of people are, and I think it's because of the misinformation.
Mm-hmm.
And then you hear the, what is it? Date the house, marry the, no, date
Oh,
the rate. Yeah.
Yeah.
I
Marry the
just-
house, date the rate.
That one, exactly.
Stupid expression.
It really is, because the thing is that when we talk about the rate, we have to talk about all of it. We have to talk about the tax advantage, so we have to know their tax returns. We have to know what kind of advantage they're going to have, because they're going to have a little bit bigger advantage than the 2% rate did. And that's an advantage, not a disadvantage. We also have to talk about the history of the rate market and when there might be an opportunity to refi, but also clearly exposing that if the market doesn't shift and turn down in the next couple of years, you have to be comfortable with the payment.
Yeah, well, it's a very simple rule
But you're
of thumb.
buying into your own retirement.
Yeah,
You're
it's
not paying somebody else's.
Yeah.
You're paying off your own home.
Well, hope for the best, be prepared for the worst. I mean, that's simply what it is. I mean, I remember 2008, 9, and 10. I mean, I do a lot of foreclosure defense, as you guys know, and I'm heavily involved in that end of the industry. And the real estate community was littered with foreclosures that were all based on, well, I thought it was going to refi a year from now.
Right.
And I thought they promised me the rate would be lower a year from now.
How
No
many
one
of
can
those
promise you
buyers
that.
did not understand the GAM?
Yeah, they didn't understand.
No, they
it's-
just didn't know.
Well, because of the complexity, it's very easy if you are of this sort. It is very easy to peddle happy faces and sunshine and
Right.
not bother to get into the meat of it, which is the receipts, which is what is the payment going to be. It is very foolish for anybody. I'll just say this as a blanket statement. It is foolish for any buyer to go out there, even look at a house without having any idea what their payment is going to be.
Right,
It's just
but
nuts.
the 2008 issue was the NAGAM.
Oh, yeah,
because
yeah.
they were paying based on a rate that wasn't true,
That didn't
because the rest of the
exist.
rate was adding to the loan balance, and
Oh,
it just became, we all know, a
I'll
fiasco.
tell you my favorite story, and then we'll go to breaks. This is my favorite. So I had a client, and he was an FHA buyer. He's postal worker. He was buying a house in Castaic.
Okay.
He delivers the mail. Lovely guy, good job, been there forever. Very easy to get a loan for him. Great credit, government job, super neat. He got an offer from Countrywide for zero money down. You're laughing because I said Countrywide. Zero money down, an 80-20 loan, and his payment would be lower, his interest rate would be lower because it was negative amortization, than it would have if he'd done the FHA loan. And he said, I want to do this. And I said, no, you shouldn't do this. So we got in a little bit of an argument about it, and I had to explain to him, look, negative amortization, you are losing money every month. Every month that goes by, you owe more than the month before. And he said, well, that's probably a bad thing. Yeah, it's probably a bad thing.
Yeah.
Now, we did eventually do the loan through Countrywide because the rate was very, very good, but he, instead of doing zero down, he did do a down payment. The biggest difference there was they wanted him to lie and say that he makes $600,000 a year. At the time, the Postmaster General made $320,000 a year, so there's no way a postal carrier is making that. But that's what they wanted him to do. And I said, well, I wouldn't do it, but I can't stop you from doing it. Nobody's verifying anything, which is astonishing.
Did you need to post that to qualify?
He wrote a letter. He just wrote a letter saying, I make $600,000 a year. And Countrywide went, okie doke. And he got his loan. And it's, it worked out fine. He still got his house today. He's, hi, Russell. How you doing? It's worked out lovely. It was, 15 years ago. But yeah, it was insane to me that Countrywide would sign off on a loan when a postal carrier says he makes more than the Postmaster General. And they just went, sure, I'm fine, must be good. So the fact that that company went out of business and took a lot of the U.S. economy and a lot of homeowners with them was not a surprise.
A lot of people lost their retirement accounts through them, too.
Oh, God, yeah. There's so much stuff behind the Countrywide stuff. And Mozilla got off, essentially. It's astonishing. But anyway, hey, I see by the clock on the wall we need to go to break, so let's go hear some more of the advertisers we got through. This is pretty good. We got through three questions in the first segment. That's pretty good for me. We'll try to pick up the pace a little bit when we get back, because I know there's a lot of stuff we want to get through. So, yeah, you're listening to The Real Estate Fix with Rich on KHTS, AM 1220, FM 98.1, your hometown station. Thank you guys for listening. Hang through the break, and we'll have more with Marcy.
Does your home need some work? Do you have a list of projects just not getting done? If this sounds familiar to you, you should call Omar Ramirez Home Repair, 661-547-8950. Omar can help get your projects done. Whether it's painting, lighting, flooring, cabinetry, plumbing, drywall repair, appliance installation, or any other home project, Omar Ramirez can get it done for you. When you need someone to help get your home looking its best, call Omar at 547-8950.
The Real Estate Fix with Rich Szerman is coming your way Friday mornings at 10 a.m. right here on your hometown station, KHTS. Whether you need help with foreclosure, mortgage, title, refinance, buying or selling, or any other real estate issue, I'm here to help. I've been fixing real estate problems for over 30 years, and now I can help you in real time. Whatever your real estate problem is, I've probably seen it and solved it before. My goal is to educate, answer your real estate questions, fix your real estate problems, and maybe entertain a bit. Join me, Rich Szerman, for The Real Estate Fix, Friday mornings at 10, right here on your hometown station, KHTS.
Your hometown station.
Our news team at KHTS is constantly working to keep you informed. If you want the latest and greatest information on the Santa Clarita Valley, just sign up for the KHTS newsletter. SCV News delivered directly to your email inbox every weekday by 5 p.m. and a special weekend edition on Sundays. All it takes is an email address and you're set. Go to hometownstation.com to register.
98.1 FM and AM 1220.
Discover programs that lead to careers at College of the Canyon's Discover Day on Saturday, March 22nd. Explore our programs, campus services, and student life. Uncover financial aid opportunities and classes with zero textbook costs. Whether you're a recent grad, a working professional, or ready for a new academic adventure, Discover Day is for you. Visit canyons.edu/Discover Day.
I love it.
Right on!
Your hometown station.
Hey everybody, welcome back. You're listening to The Real Estate Fix. I'm your host, Rich Szerman on KHTS, 98.1 FM, AM 1220. And we have in studio with a special guest, Marcy James. Hopefully you guys listened to the last segment. If not, it's rebroadcast on Facebook and YouTube and stuff. You can catch it. But we were talking about all kinds of mortgage stuff. Really, really good advice for you guys. If you're looking to buy a house, if you're looking to refi a house, if you're looking to do anything that has anything to do with a mortgage, Marcy's who you want to talk to. That's why I was so keen to have her come in today. And thank you again for coming in and doing that.
Absolutely.
Because, thank you for answering our questions. I really appreciate that as well. Although you can also call Marcy on the phone. She'll answer these same questions for you. Actually, as long as we're talking about it, do you want to give out your phone number? Let's let the people get a hold of you.
Sure. You can reach me at 661-412-0700.
412-0700. So any questions? Also, you can also get a hold of Marcy through me. I'd be happy to give her, I give her out her phone number all the time. You can get it through me as well. So if you have any other questions we don't touch on the show today, you can ask me. Again, my cell phone, as we give out every show, 661-714-1400. That's my personal cell, 661-714-1400. Please don't call me during the show, but otherwise, I'll answer your questions anytime. You call me 24 hours a day, 7 days a week. If I don't answer, send me a text, and I will call you back. I don't expect you have the same rule, because I doubt you want to answer your phones 24 hours a day. But I have insomnia, and I like what I do, so that's what works out for me. You'd be surprised. Yeah, I just didn't want to say that to everybody else. Anyway, okay, so let's move on. So we get more questions here. Let's get on to some of the stuff that I kind of wrote in here, which I was a little more interested in myself, to be honest with you. Well, we talked about the current market in the area, so we won't bother with that one. Just a personal, how did you get into mortgage banking? What led you into this field? I mean, you're good at it. You've been doing it for a very long time, but what led you into this?
You know, I always like numbers. I like numbers. I remember numbers. Numbers come easily to me. So what makes better sense unless you want to be a CPA and just sit behind a desk, and that's just not my thing.
Yeah.
I like people. I'm very interactive. I'd like to be social. So this was a great fit for me. And then also understanding the mortgage industry from the credit reports all the way through the tax returns and then the guidelines. It just keeps it, it's always changing. It's always interesting. The conversations are always great. The people are wonderful. The buyers are amazing. I mean, I do homes now where I went to the mother's baby shower. Those babies are now grown and I'm doing mortgages for their kids.
Yeah, I've got that too. I've got a client right now who, and this is unique. My mom's actually working with him. My semi-retired mother's taking this one. He is actually the grandson of somebody I sold a house to. My mother and I sold a house to in 1989.
Yeah.
So, 1990. So, yeah, I mean, that's great, but it makes me feel really old. So, but thank you. Doesn't mean you shouldn't come. If I haven't talked to you in 20 years, you should still come. We'll sell you a house and do all the other stuff for you because we still like having business because it keeps me clothed and my wife and the lifestyle to which you'd like to become accustomed. Anyway, so no, I like same thing for me. I like numbers, the certainty they provide.
Right.
It's people are kind of all over the place sometimes, and then policies and things get all over the place sometimes. But the numbers are the numbers. 1 + 1 always equals 2.
Even with core math, it's 2.
Yeah, exactly. Yeah, that's because you've raised 5 kids. That's why. A lot of friends are teachers. They're doing the best they can with this, but you don't change math every 2 years. The way we teach math, we're just going to keep changing. It's math. We had
1 + 1 is 2.
The Greeks had this worked out. I mean, I'm not saying it hasn't been revised in the last several thousand years. It certainly has, but yeah, it doesn't. You don't have to find 14 different ways to teach it, for God's sake. Anyway. Right. So let's get back to the rest of our list. So, okay, this is a good one. What's FHA, VA, conventional, USDA, et cetera? What's the difference between all the alphabets and the various stuff?
Well, these are so simple to understand.
Yeah.
VA, if you are a veteran, so if you are personally a veteran, then you can use your VA benefits. You have entitlement to be able to buy a house. It's a zero down payment program. It does not mean you need no money. You do need closing costs, and with the new regulations on the realtor commissions, that has to be discussed up front.
Should be
But you
anyway.
can do a zero down payment and use your VA benefits to buy a home. The rates are relatively low. And the nice thing about VA, there is no DTI.
Yeah.
Which is really unique. I closed one for a neurologist out of Los Angeles, and my DTI was 86.
Tell them what DTI means.
Debt to income ratio.
Huge. That's actually the next question. What is a debt to income? We'll go back. We'll circle
Yeah,
back
it's how
to
much
some of the
debt
initials.
versus how much income you have.
Yeah. It's most, just to short circuit a little bit, please correct me if I'm wrong. Most lenders are looking for a debt to income ratio, back end as they call it, really no higher than about 48%. You can usually squeeze to 50 something depending on the type of loan.
Conventional would be 49.999.
Okay.
FHA is 56.999. VA, there is none.
Yeah.
And USDA is 43. 42.999.
See, I
Don't
didn't know
mess
the
with USDA.
I didn't know the USDA
Yeah.
one. USDA is another way to buy a house. It's also zero down. It's another good program. FHA is very similar. It's 3.5% down. It's very similar to VA. Not quite the same, but very, very close. You started as a first-time buyer program and hasn't been that for 30 years. It's a great way to buy a house, though. It's a little bit easier to qualify. But when you're talking debt to income, what they're looking for, that is how much of your money that comes in is spent before you ever see it.
And
Your
the other thing to
recurring
keep in
cost.
mind is that we go off of gross income.
Yeah.
We don't go off of net.
Yeah.
So when you think about like an FHA buyer and we're going to 56.9%, if we're at the top of their price point, that's gross income. So that we really want to make sure. Typically those people, they usually have another form of an income.
Yeah.
They have a Schedule C income, or
Yeah.
they have some other
Some
form,
sort of side hustle, yeah,
some sort of
usually. Well,
side
they-
hustle that
Yeah.
they're doing that
Yeah.
doesn't make that feel like they're choking.
Yeah.
Conventional, we can go as high as a 50% debt to income ratio.
Okay.
Like I said, USDA. USDA, the other thing about USDA is the house is very important on the USDA because it has to be zoned
Yeah.
in rural property,
Yeah.
which we don't think of much in Santa Clarita.
Yeah.
But there's actually a condominium complex in Castaic that is USDA approved.
That I didn't know. See, I learned something today too. I know we
So-
use it a lot for Acton, Agua Dulce, up in
Right,
Castaic,
exactly.
Valverde sometimes, yeah.
Some of outlying areas of Palmdale,
Palmdale, Lancaster, sure, yeah,
exactly.
absolutely. I see we're running out of time. We're up. Always more. I always want to talk to you more than we have show for. Let's go. We got one more question we can finish. Let's see. Let's pick a winner. Let's talk about credit scores. I get this a lot. Can you fix? We got 1 minute left. Can you fix a credit score?
Okay, we can fix a credit score with the buyer's with the buyers being responsible.
Yeah.
So we do have a system that we can use, and we can look at see what we can do to pop the scores. Sometimes it's adding a credit, sometimes it's paying down credit, sometimes it's moving money around. So we do have the capability to do it. You can. There's a lot of people out there that also clean up credit if you have some big issues.
Yeah, you can usually
minimum
do it by
score
yourself,
is 580. That is the minimum score on FHA, 620 on
The
conventional.
lesson here is whatever your problems are, call Marcy, call me. But we can get them fixed. If your credit's problematic, we'll fix it. There's a way to fix it. Where there's a will, there's a way, always in all things. It's not that big a deal. It may take some time, may take some energy, but don't just assume that because you pay off a credit card, that's the problem and you're fixed. Get an analysis done. Call Marcy, have her run the thing, find out. That's basically where we want to start. So thank you guys for listening. Thank you, Marcy, for coming in. I really appreciate it. I'm sorry we ran out of the show. We always run out of the show. I got so many more questions for you. But